Man, I've got some really exciting news for you in this video here today. Robinhood is completely trying to change the investing game once again by introducing something called a venture fund right within the Robinhood platform. I'm going to break it all down in this video here today, give you some insight into why this could be the best thing to ever happen for retail investors or why it could potentially flop. And I'm definitely curious to know what your opinions are in the comment section down below, but let's just jump in. So let me paint the picture for you. Imagine that you're in a bar in 2010. Your buddy comes up to you and says, "Hey, I just put 10 grand into this little company called Airbnb. People are renting out air mattresses in their living room. It's going to be huge." Now, I remember when this had happened at the time, you kind of heard about Airbnb, you would laugh, and you'd probably finish your beer at this time and forget all about it. But fast forward, Airbnb goes public in 2020, and that same buddy's 10 grand has actually now turned into tens of millions of dollars. Here's the kicker. You would have never even had the chance to invest alongside of him. Why? Well, because he was accredited and you weren't. Robinhood thinks that that's unfair, and now they're going to kick open the door with something new. Robinhood Ventures. Trust me when I tell you this is something worth paying attention to. 20 years ago, we had around 7,000 public companies in the US, and today, just over 4,000. Meanwhile, the private markets have absolutely blown up to more than $10 trillion in value. This is a huge problem because this is where massive growth is happening, and regular folks, retail investors like you and me, are completely locked out. Now, Robinhood's CEO, Vlad Tenev, has been on the forefront of this and notices it. I mean, he's quoted saying, "For decades, wealthy people and institutions have invested in private companies while retail investors have been unfairly locked out." He's making it personal, like the game's been rigged against all of us. And I gotta say, for Vlad, I love this because there has been a lot of wavering opinions on the man himself. Now let's talk about this velvet rule, the accredited investors. The SEC came up with the standards decades ago. I mean, to be accredited, it meant that you were earning over $200,000 a year, or you had a net worth of $1 million, not counting your house. So the idea was simple. If you're rich, you can afford to lose money on risky startup bets. And if you're not, well, the SEC wanted to protect you by keeping you out. On paper, it makes a ton of sense because startups, yeah, they are really, really risky. Roughly 90% of them fail. But here's the problem. The ones that actually succeed, they succeed big. Think about Amazon in the 90s, Facebook in the 2000s, obviously the Airbnb situation. There are so many opportunities that you can make a ton of money from stuff like this. But by the time these companies go public, a huge chunk of the market upside is already gone. So while the SEC's rules were designed to protect people, they also meant that for decades, wealth creation was also gated behind wealth itself. The rich were getting richer, and the rest of us, well, we're left buying the scraps once companies go public, fueling the further funding for rich people. Gotta love it. So here we go. The hero wearing the cape in the situation, Robinhood. Their whole brand is about tearing down walls. They started and implemented free trades. They did fractional shares, crypto for the masses. They pioneered all of this stuff and forced mainstream brokerages to offer something similar and really just break down that barrier towards investing. They're trying to tear down the last big wall, which is venture capital. And here's how they're planning to do it. Robinhood has filed for something called Robinhood Ventures Fund I. It's a ticker symbol RVI. It's a closed-ended fund, which means basically it'll raise a pool of money from people like you and me, and it's going to invest it in startups, and then it lets you trade shares of that pool on the stock exchange. Think ETFs, but for startup companies. That's the trick. By wrapping these private investments in a public wrapper, then suddenly anybody can buy into it. You, me, the college kid with $50 in their account. It doesn't matter if you can buy Apple stock. Well, yes, you could buy RVI. So you might be wondering what the fund will actually hold, and Robinhood said it's going to be a concentrated portfolio of private companies at the frontier of their industries. So in translation to me, this sounds like it's going to be AI, biotech, fintech, space, whatever's hot at the time. And the idea is to hold these companies through their IPOs and beyond. Now, this sounds exciting. Everything's going to be great. We're all going to become millionaires from a fund like this. But hold on, that's not the case. I don't want to romanticize this by any way, shape, or form, because here's where it gets really messy. The risk is real. Like I mentioned, 90% of startups fail, so this happens a lot. Venture capitalists know this, so they spread their money across dozens of bets, hoping that one becomes the next Stripe or SpaceX. If Robinhood's fund only picks a few, the stakes are even higher. Then there's weird pricing. You see, closed-end funds trade based on supply and demand, not just what the value is of everything inside. That means RVI could trade at a premium. I mean, you could potentially be paying $12 for $10 worth of startups, or at a discount if demand dries up. So it's really going to be interesting to see how something like this is priced on the market. And then liquidity quirks add another wrinkle. You see, normally with an ETF or a mutual fund, you can sell whenever you want. With interval funds like this, there may be redemption windows or restrictions that you have. You can always sell shares on the stock exchange, but only if somebody wants to buy them. It is completely supply and demand driven. And then there are opaque valuations. Public stocks get priced every single second, while private startups, not so much. Their value only gets updated when they raise new funding rounds. That means that you could own RVI for years before ever really knowing if it's paying off. And the biggest question and concern, in my opinion, is going to be, what are the fees for something like this? This is probably going to be actively managed. They're going to be trying to go out, take their time, find some of the best startup opportunities. So I can imagine there's going to be a relatively hefty fee with a fund like this. It's something that we can only speculate on at this point. So you might be wondering, why does any of this really even matter? Well, it's because it's the first time that someone's trying to crack the venture capital monopoly at scale. If this works, it means that you don't need to be a millionaire or work in Silicon Valley to invest in companies that are going to be shaping the future. It could also change how startups raise money. Imagine that founders skip the old VC firms and they start tapping into people like Robinhood's user base instead. Suddenly, venture firms aren't the only game in town. And culturally, what I think this could do is nudge retail investors to think long-term again. Instead of chasing meme stocks for quick hits, maybe people start seeing themselves as patient backers of innovation. That would be a massive shift in mindset, and of course, this could also flop. Robinhood's never run a venture fund before, and if the first batch of companies in it tanks, well, retail investors might be really sour to the whole idea, and regulators, you know that the SEC is going to be watching this experiment like an absolute hawk. So here's the multi-million dollar question. Is Robinhood Ventures a genuine revolution or just a shiny new toy that's going to burn people? If you could finally back startups like SpaceX or OpenAI before they go public, would you do it? Or is this one party that you'd rather not crash? I'm really interested to know what you think in the comments. As always, stay smart, invest responsibly, and I'll catch you later.